I
Yeah.
want to talk about inflation. The way economists talk about this is inflation. The way regular humans experience it is prices. And I never want to lose sight of that. To me, the answer to the political conundrum of why people were so unhappy a couple of years ago that led to the election of Donald Trump with the economy was that disconnect. Even as we began to get a handle on inflation, prices were still high. Life was still unaffordable for so many people. And so I want to recognize that up front. But we still do have this problem with inflation. We still kind of have this lingering fever that we can't quite get rid of, which suggests that there's an underlying infection. Why is inflation so hard to get control of?
It was, if you go back a year ago, it felt like inflation was coming right back down to something that we'd all feel comfortable with. I mean, just to give you a number, the Federal Reserve Board targets 2% inflation. They look at the consumer expenditure deflator measure of inflation. They say if it's 2%, that's exactly where I want it. Anything higher than that, I'm uncomfortable with. Anything that's meaningful below that, I'm uncomfortable with. I want 2%. If you go back a year ago, before the tariffs and the immigration and everything else, inflation was decelerating. It was coming in, looked like we were going to soft land. Inflation was going right down to 2%. Of course, things changed. The tariffs, the heavy-handed immigration policy, those policies are inflationary. The tariffs, by definition, are inflationary. It's a tax on American businesses and consumers, you and I, and that tax is in the form of the higher prices we have to pay for imported goods. So that caused inflation to pick up. By the way, that goes to the uncertainty, the lack of job creation, the loss of jobs in manufacturing, everything we just talked about, and one of the reasons why the economy is fragile. The other is the heavy-handed immigration policy and the fact that immigration I have no problem with controlling the southern border. I think that's a good thing. But we've gone well beyond that, and we're seeing immigration flows into the country that are half what is typical. Going back many decades, we'd get about 1 million immigrants every year, both legal and undocumented. Now we're down to, there's some debate as to exactly how low, but 250K, maybe 500K. So that makes life very difficult for businesses that rely on those workers. So agriculture, construction, retail, leisure, hospitality, transportation, distribution, to a lesser degree, manufacturing, all childcare, elder care, personal services, all rely very heavily on that. And the companies can't find those workers, and that causes prices to rise. It makes it difficult for those companies to produce. It weighs on growth, but it also causes wages to rise, prices to rise, and costs to rise. So it's a combination of those policies conflating that puts inflation out higher. And now, unfortunately, we're getting nailed with the war in Iran and the impact that's having on energy prices and agricultural prices through fertilizer and everything else. And that's just going to add to the inflationary pressure. So I said two's the goal. We were headed back to two. It felt like we were going to soft land. We're now at three. The most recent data puts us at 3%. And that's before the effects of the Iran war. That's going to push it up even higher. So if you told me by June, July this year, we're at 3.5, close maybe even 3.5 to 4. I don't know that I'd be surprised with that. And that's going to we're going to go from being uncomfortable to very uncomfortable. And another reason to worry about that fragility in the economy and the potential for the economy, businesses pulling back, laying off, and us going into recession.
I want to go ahead and hit you with Lefty Grams's question here. When the supply chain is fixed and corporate profits are all-time high, the prices never go down. And I guess let me just pile on to that question a little bit. I mean, it sounds like I agree with what Lefty is saying here, which is that from a regular consumer / voter / American / human standpoint, what you really want is for prices to come down. We did see that because of some short-term effects with eggs, for example, but most prices, you're not seeing deflation here, and that's not going to be the source of greater affordability. Most of the time, from an economist standpoint, what you're hoping for is that you get the rate of inflation low and controlled enough so that rising real incomes overtake it, so that people find things to be more affordable, right? It's not like absolute prices go down. It's that your income overtakes them by enough that you're better off. But why don't prices ever go down given corporate profitability.
Some prices go up and some come down. Commodities, you mentioned agricultural prices,
Right.
gasoline prices go up. Although there's that old adage that prices go up like a rocket, come down like a feather. And that's what we see when there's any disruption. Businesses jack up prices, and the cost of a gallon of regular unleaded back 2 weeks ago was less than $3 a gallon. We're now closing in on four. That's a pretty rapid increase in price. That's a rocket. And ultimately, those prices come back in as competitive pressures kick in, but that takes time for that to play out and for prices to come in. But those are commodities. For most other goods and particularly services, you're right. The prices are very sticky. They generally do not fall. Businesses are very loath to give up to cut price, because if they start cutting price and cutting margin, then they might have to go back to their workers and say, "Hey, I can't. Not only am I not going to pay you an increase, we're going to have to work together to get your wage down." And it just gets very uncomfortable. And also, the other thing is, a lot of these companies take on debt and borrow money to help finance their expansion. That's based on the prices that they have. If prices actually started to fall and their revenues started to decline, they have problems making payments on that debt. We'd see defaults, and that would create its own set of problems. Because this goes back to Keynes. Remember Keynes back in the World War II period, the very famous economist. He said prices are sticky, and their prices and wages are sticky, and that's why in our system. But you got it just right. I think the way we want to restore affordability, make people feel more comfortable that their earnings or income is sufficient to do the kinds of things they need to do to have a reasonably good life, is we want stronger wage growth. Prices kind of go flattish, growing slowly, and you have wage growth that's stronger. That's the way we get back to affordability. And to some degree, we were there. Again, I go back to this time last year, inflation was headed to 2, wage growth was 4 to 5. You kind of do the arithmetic, you say, okay, people are going to start feeling better. And in fact, people were starting to feel better. But now we're at 3% inflation headed north, and wage growth is decelerating. It's a little over 3% and headed south. People feel that, and that's making them very uncomfortable. And people do forecasts, right? So when you see inflation slowing and wage growth accelerating, you go, oh, this feels, I can see where the world's going to look even better a year from now and 2 years from now. And that affects people's ways of thinking about things. But here we are on the flip of that. They're seeing inflation accelerate and wage growth decelerate, and say, oh my gosh, if that continues, what's the world going to look? My life is going to be even more difficult a year from now. So that also plays a role in how people think about and perceive what's going on. But you got it just right. The most desirable way to restore affordability is strong wage growth, strong earnings growth, and hopefully inflation getting back to something that's closer to the Fed's target.
Right. And I want to acknowledge Lefty's summation of it, which is the corporations keep their ill-gotten gains, which is, I think, a slightly frostier way of saying, like, yeah, once you've managed to raise prices,
You're
you're
not going to give it up.